The national vacancy rate for the multifamily sector rose by 10 basis points in the third quarter, ending the period at 4.5%. Year over year, vacancies have risen by 40 basis points, and this is really not a surprise. Reis has been predicting the vacancy rate to increase through 2017, given the record amount of new supply that's coming online. We haven't seen this kind of supply growth since the late 1980s, and for markets like New York, it's going to be a record-breaking year in terms of the number of units that are going to open their doors throughout the period. Asking rents grew by 1% in the third quarter. Effective rents grew by 0.9% in the third quarter. Year over year, asking rents grew by 3.8%, and effective rents grew by 3.3%. This is consistent with market dynamics. As new supply comes online, a lot of existing buildings find it really challenging to lease up new space or vacant space, and so concessions are going to make a comeback, and effective rents are going to grow slower than asking rents. The good news really isn't around the immediate corner for the multifamily sector. It isn't until 2019 that we should see a significant slowdown in supply growth as creditors and lenders pull back on the risk of new supply coming online. But with that said, there are a lot of markets like Washington, D.C., where vacancy rates began rising in 2013, 2014 or so, with a little bit of lull in terms of supply growth coming in. You see the vacancy rates dipping. And what's ended up happening is demand remains strong. We will see how quickly this new supply is absorbed. The next 4 to 6 quarters might be challenging for multifamily, but there's still a ton of renters out there that's willing to absorb all this new space.